Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak here at Podcast. Good morning. It's Wednesday, the 3rd of September. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, the US and Japan join the global bond sell-off as markets extract higher returns for long-dated government debt.
China's Xi says the country will never be intimidated as he is joined by the leaders of Russia and North Korea for a once-in-a-decade military parade.
Plus, confronting paralysis at home, the Polish president's White House meeting with Donald Trump threatens to be overshadowed by political tensions in Warsaw.
Let's start with a roundup of our top stories.
Growing concerns over government debt burdens and public spending are helping to drive a sell-off in global bond markets. The yield on 30-year US Treasuries rose close to 5% as Japanese long-dated bond yields also rose. The moves track yesterday's declines in longer maturity European bonds and come as an avalanche of new corporate debt enters the market. Across the globe, borrowers issued at least $90 billion worth of investment-grade debt in one of the busiest weeks of the year. Mark Cranfield is Bloomberg's Markets Live strategist.
What's developing here is that you increasingly hear governments around the world, they want to spend more money, fiscal deficits are likely to worsen, and investors read that as meaning there's going to be more long bond issues wherever you are in the G10 space.
Mark Cranfield speaking there as traders contend with a range of concerns from key economic data and US tariffs to the assault on Fed independence.
Now, the global sell-off broke records here in the UK with long-dated gilt yields hitting a level not seen since 1998. Government bonds and the pound sold off together in the rout in a sign of foreign investors' wavering confidence in Keir Starmer's government. Stubbornly high inflation and extremely tight government spending plans make Britain vulnerable to the moves in the global bond market. Also, Bloomberg's chief UK economist Dan Hansen says that the rising yields bring further problems.
I think if you run it back of the envelope, it takes about 8 billion away. So she had 10 billion of headroom. All else equal, imagine the whole world is unchanged apart from this moving gilt yields. She would have 2 billion of headroom, so you wipe out nearly all the headroom just based on the moving gilt yields. Of course, that doesn't take account of the policy U-turns that we've had, and also, of course, the potential for the OBR to downgrade its outlook.
For Dan Hansen, Bloomberg's chief UK economist, the global macroeconomic picture means that Chancellor Rachel Reeves would be wise to build a bigger fiscal buffer against volatility. Many expect the Labour Chancellor will now need to raise taxes in her upcoming autumn budget to meet her fiscal rules.
US Treasury Secretary Scott Bessent is said to be planning to start interviewing candidates this Friday to replace Jerome Powell as Federal Reserve Chair. According to the Wall Street Journal, Bessent will talk to candidates either in person or by video conference, with 11 people in the running for the role. Robert Kaplan, Vice Chairman at Goldman Sachs and former Dallas Fed President, says it's to be expected.
Jay Powell's term as chairman ends in May, and so it makes sense that they should start the interview process. I think the main thing for the leader, the next leader of the Fed, has to be somebody who has strong grounding in economics and can make independent judgments about the economy.
Robert Kaplan speaking there to Bloomberg as Federal Reserve Governor Lisa Cook's lawyer blasted President Donald Trump's move to oust her as being based on nothing more than cut and paste allegations of mortgage fraud made in social media posts. In a flurry of court filings, Cook's attorney doubled down on arguments he presented at a hearing last week, saying Trump lacked valid grounds to fire Cook for cause.
Now, President Xi Jinping has been showcasing China's growing military firepower at a once-in-a-decade parade in Tiananmen Square. Xi appeared alongside Russia's Vladimir Putin and North Korea's Kim Jong-un, the first time the three leaders have done so publicly. It's a signal that they are willing to coordinate more openly in challenging the US-led global order. The event, hosted by China, marks 80 years since Japan's defeat in World War II. Xi Jinping says his country remains unshaken by threats.
The Chinese nation is a great nation that is never intimidated by any bullies and always values independence and forges ahead. In the past, when faced with critical struggles between good and evil, light and darkness, progress and reaction, the Chinese people rallied together to defy the enemy.
The Chinese president speaking there via a translator. The parade is part of the Communist Party's broader effort to fan nationalistic sentiment, unveil new weapons, and display Beijing's diplomatic influence.
Jane Street made more trading revenue in the second quarter than any Wall Street bank in history. Bloomberg has learned the firm netted $10.1 billion in trading revenue. That's more than double the size of the firm's revenue in the same quarter last year and beats all of Wall Street's biggest banks. Bloomberg's James Woolcock has more.
Jane Street has emerged from relative obscurity as a market-making giant in finance. Together with Citadel and Hudson River Trading, the firm has provided liquidity at ultra-fast electronic speeds and turned it into a $30 billion industry. The three companies pull in similar amounts to some of Wall Street's biggest trading desks. But the banks would argue that unlike the newcomers, they have to abide by post-2008 regulation, which stops them from making riskier bets. Jane Street's $10 billion windfall this quarter was recorded before India's regulators launched a crackdown on the firm. In London, James Woolcock, Bloomberg Radio.
A US federal judge ruled yesterday that Alphabet's Google does not have to sell its popular Chrome web browser. However, the firm will be required to share online search data with rivals and can no longer dictate that device makers take all its apps to access the Google Play Store on Android. Global head of tech research at Bloomberg Intelligence, Mandeep Singh, says the decision was unexpected.
It is surprising because Judge Mehta was in favor of divesting Chrome, which is the key asset here that everyone is looking at. And in this case, I think the ruling clearly states that they're not required to divest Chrome. At the same time, there won't be any exclusive contracts. So that means the Google Apple thing won't be at least allowed anymore.
Bloomberg's Mandeep Singh there. In a statement, Google praised the judgment for recognising how AI has changed the search industry, but said that the company continues to disagree with an earlier ruling that it monopolises online search.
The UK government is planning to ban under-16s from buying energy drinks, citing health concerns. But the soft drinks industry say manufacturers have already taken steps to self-regulate. Bloomberg's Tiwa Adebayo has the story.
Drinks including Red Bull, Monster and Prime will soon be off limits for under-16s in shops, restaurants and online in England. The new law will build on existing voluntary bans in place at most supermarkets and excludes lower caffeine soft drinks like Diet Coke, coffee or tea. A 12-week consultation period on the legislation will now begin, gathering evidence from health experts as well as retailers and manufacturers. Energy drink sales have soared in recent years. Red Bull's revenue grew 17% last year, mainly driven by increased UK distribution, with 75,000 new points of sale. Research from the British Medical Journal shows up to a third of British children consuming one energy drink every week. Northern Ireland, Scotland and Wales are also considering a similar ban for under-16s. In London, Tiwa Adebayo, Bloomberg Radio.
So those are our top stories for you this morning. No, I don't have a Red Bull to hand, just a cup of tea, but let me update you on the markets this morning. In terms of the bond slide that we've seen globally, Japan has joined that, so too has Australia, looking at those 30-year yields. So JGB is currently trading at 326, so up by 3.5 basis points this morning, 519, so 6 basis points higher, for example, for the Aussie yield. This, as we saw, Treasuries and gilts both slump on Tuesday. That really means a sour note to the start of September for stocks, although stock futures actually for Europe are positive this morning. Will that really last, given that the all-country world index is currently down 0.2%? The MSCI Asia Pacific index also slumping 0.8%. The dollar is stronger, the pound and the euro are softer this morning, and gold continues higher, up 0.1%. Those are the markets.
In a moment, we'll have analysis of the global bond market moves, plus why the Polish president's White House visit is highlighting political tensions at home. But another story that we've been reading this morning about the efforts that defence firms are making to try and recruit the latest top graduates.
What did companies give you when you were looking for a graduate job? Do you remember, Stephen?
Nothing. I'm a journalist. There's no jobs then. There's no jobs now.
Oh, yeah. Okay, that's true. Well, listen, for Rheinmetall, the German defence company, it's bit cheeky, really. Packet of condoms with the tagline, safety counts, always and everywhere. I mean, number one, yes, I am surprised that companies are still recruiting in person, it seems, with these sorts of gimmicks. But it also just shows how far defence companies are trying to recast their public image and, crucially, to attract new, younger workers. Now, Bloomberg's Chloe Millay and Aaron Kirchfield have been writing about this. There is so much money that's going to be poured into defence and the defence industry. We know they've been speaking to companies like Hensoldt, to Leonardo, to Babcock, BAE Systems, because they're all scaling up recruitment.
Well, it's an interesting thought as well about how people are perceiving these industries too. You know, a lot of people would have, for whatever moral and ethical arguments, not wanted to work for a defence company. But now, in the current age, people feel like they're getting involved in protecting their societies, protecting the things that they hold dear, and as a result it's an attraction to the profession, whereas in the past some people might have argued that it put them off.
Yeah, look, there's 1 million people in the industry apparently in 2023, but there may be 750,000 more jobs required. But it's not just gimmicks. I mean, there are other perks. And of course, actually, the industry apparently does pay very well. So a story that we are tracking. We will put a link to that write-up in our show notes for you.
Well, let's turn to the global bond sell-off now. Continuing today on long-dated debt in Japan and elsewhere. Our Markets Live executive editor, Mark Cudmore, is with us for more. Mark, put this in context for us. How significant is this sell-off on bonds?
So far, it's been relatively steady and not overly dramatic or panicked, but it's very significant in terms of that it's ongoing and there's no sign on the horizon that it's going to improve anytime soon. In fact, we expect stress to increase significantly into year-end. And many of these bond market yields at the long end, you take France, Japan, UK, are at multi-year highs. US not quite at multi-year highs yet on the 30-year, but pretty close to it. So, that fiscally fraught four, I think, are very vulnerable to significant worse sell-offs. And I think this is going to be the big theme for the last few months of the year.
Have you been watching the Fantastic Four? Fiscally fraught four. I like that description.
I've just decided right now I'm going to coin that, so you got to start spreading it around.
There you go. Yeah, Fantastic Four. Okay. How does the US economic data play into this? I mean, we had a weak ISM report only yesterday.
Yeah, so each of those countries I named have kind of idiosyncratic stories. I think they all have fiscal concerns about, whether governments are taking their debt loads seriously, but they all have varying degrees of inflation concern. The US one's a little bit interesting because, the new narrative in the US is that, hey, growth's holding up okay, and yet the Fed's being pressured to cut rates. So you're going to get easing monetary policy into a re-accelerating economy is the current narrative. So that means, inflation will take off again. And I think that's the big concern in the US. So for the US, it's a slightly weird one. It's a little bit different than others where they're trading more of a stagflation narrative. US was trading that. I think this week, ironically enough, it's if there's very strong data this week that it might be most panicked for the bond markets, whereas for some of the other countries, it's not that way around.
So I get the impression you don't see the UK as being a particular outlier. A lot of attention paid to those headlines yesterday that the 30-year yield had got to the highest since 1998.
So the UK's got the highest 30-year yields of those four. So in nominal terms, it is the most under stress at the moment. The one probably highest 30-year yields and the biggest change from a few years ago. So yeah, UK, it probably is at the forefront of stress. But there's many different ways of looking at it. I think if you look at the term premium in the market, it's the Japanese bond market. But again, that's a bit more. So it's all slightly idiosyncratic. The ownership situation in Japan, where so much is domestically owned, makes it a little bit more insulated. But so yeah, I think if I had to pick one that's probably at the forefront, I would say it's the UK. It might be surpassed by France soon enough, but I think Europe is at the forefront of this right now, not the US or Japan.
Ouch. Well, you did mention that it could get more pressure towards the end of the year. September's traditionally weak in terms of the month for bonds. Should we be expecting more difficult times in the weeks ahead? And what would propel that?
Yeah, I mean, look, the first catalyst is the French political risk, which is only at the start of next week. So that's the next big catalyst. And I said France is rapidly catching up to potentially take over from UK as being at the forefront of pain. But none of these countries seem to have very clear solutions to the stress at the moment. So it's just kind of building. And, at some point, and I don't know that the ultimate catalyst will be, it might be an internal markets one, is there's going to be just a binary tipping moment where the losses just start getting so much, they start spiraling. And because it's a global situation, that's very worrying. Normally, if you've got one country under pressure, then essentially if you've got enough of a sell-off, there's enough money to be elsewhere to kind of pour in. But if every kind of market is selling off at once and all these long-end kind of natural buyers, all these pension funds, real money funds, if they're all experiencing large mark-to-market losses, then no one's there to buy the dip. So I don't know what the final tipping point is, but everything is a worrying catalyst in the months ahead. The next one to look at is probably France.
Okay, Mark Cudmore, our Markets Live Executive Editor. Thank you.
Stay with us. More from Bloomberg Daybreak Europe coming up after this. Now to Poland. The Polish president is meeting Donald Trump in the White House later today. Karol Nawrocki's trip comes at a time when there's increasing political paralysis in Warsaw. That's being driven by tensions between the president and the government led by Donald Tusk. Piotr Skolimowski leads our team covering Eastern and Central Europe, and he joins us now from Warsaw for more. Good to speak to you, Piotr. How are these political tensions then hurting policy making, firstly, in Poland?
Good morning. Indeed, so we will have Karol Nawrocki in Washington today, and the trip is very significant. Nawrocki won presidential election, which was a shock for the establishment here. What we have to remember is that this election was critical for the government of Donald Tusk. He came to power in 2023. It was a huge success for sort of pro-EU forces in Poland. It ended a period of 8 years of populist rule. And the hope was that in this election, the presidential election, the government will have an ally at the presidential palace to work together to sign bills, reverse some of the policies that the previous nationalist government had in place. Instead, they got a nationalist or pro-opposition candidate who also is pretty new to politics. And the main concern for the government here, when we speak specifically about the domestic policies, is that we've already seen that Nawrocki, when he came to power, he vetoed already 7 bills. One of the bills includes expansion of the wind farms, for example. And we've been hearing, and we've been writing this in a story as well, from some of the government officials, that they are growing worried that if you have a situation where there is really no clarity on policy, this may spook investors. And Poland has been growing very rapidly. It's been really an economic success, but it also has a huge deficit, and that also needs cooperation between the president and the government. And here again, Nawrocki has said he's going to veto any bills that would raise taxes. So purely on the domestic front, it's a very tricky situation for the government, and they just don't have someone that they could work with in the presidential palace.
So Nawrocki, endorsed by the MAGA movement in the US, what will he be hoping for from today's White House visit?
So Nawrocki, it was quite a significant situation where Trump literally came out and endorsed him before the election. I don't think it's pretty unprecedented. We know that what he's trying to get, and here he seems to be aligned with the government, is making sure that Trump, since the U.S. administration is reviewing its troop posture in Europe, make sure that U.S. doesn't pull troops from Europe, and especially from Poland. Poland currently hosts around 10,000 troops, which have been deployed here after the start of the full-scale invasion. So that's that point number one. Another thing is support for Ukraine. And here we have, again, the situation where the government is speaking with one voice and the president with another. The government is very much aligned with EU. They're very much supportive for Ukraine. Yes. We're not clear about where Nawrocki stands here, because he's against EU membership for Ukraine, also for NATO. So here we really don't know how far he's going to take that message that the government really wants him to take to the White House.
Indeed. So then what are we expecting from the White House meeting today? As you say, Nawrocki endorsed by the MAGA movement. What might emerge?
Yeah, it's really interesting what happened before the visit itself, because usually the way it works is that President receives certain instructions or government statement that he takes to meetings like that one, and just to give you a sense of the paralysis that happened, or kind of the sense of the route that we have here, is that instruction, which is a document, it's pretty secret, has been leaked. So, for example, the government warned Nawrocki not to discuss certain aspects, such as, for example, tax on internet companies. The question here is whether Nawrocki is going to, given that he's so close to Trump, is going to just go in line with Trump and pretty much accept whatever he wants, or he's going to work with the government and sort of work with its policies. But the key thing that, as I mentioned, the key thing is troops, and here probably Nawrocki will work together with the government. The question is, will he actually deliver this strong message of support for Ukraine?
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.